Hey everyone, welcome back to Corporate Decoder, the place where we untangle corporate filings. Today, we're diving into CDW's annual report, so get ready for a wild ride through IT solutions because let me tell you, this report is more complex than setting up your grandma's new smart TV. We are going to uncover if they are still making money with their IT solutions for businesses, government, education, and healthcare. CDW, a big player in the tech world, helps businesses, governments, schools, and hospitals get the tech they need. They sell everything from laptops and software to complete IT systems. Think of them as the middleman between the big tech companies and the organizations that need their products. CDW operates in markets with tons of competition. They're up against thousands of other companies all trying to sell it. Despite the crowded field, CDW thinks demand for it will keep growing faster than the economy as a whole. This growth is driven by new technologies like cloud computing, artificial intelligence, and increasing need for better security and productivity. CDW believes that it provides unique value to both its vendor partners and its customers. To customers, they offer a broad selection of products, added services with integration capabilities, highly skilled specialists, and solutions across IT lifecycle. To vendor partners, they offer access to over 250,000 customers, large and established customer channels, strong distribution and implementation capabilities, and customer relationships driving insight into technology roadmaps. CDW works with over 1,000 different tech vendors, including giants like Adobe, Apple, Cisco, Dell, Google, HP, Microsoft, and many more. They sell a wide range of products and services. In 2024, three of their largest vendors each accounted for $2 billion in net sales. CDW's strong relationships with these vendors give them access to better pricing and resources, which they then use to give customers more value. CDW uses different ways to manage its inventory and get products to customers. They have distribution centers for storing and shipping products. However, they also use drop shipment deals with manufacturers and distributors. This helps them offer a wider range of products to customers without holding all of it in their own warehouses. The market for technology products and services is super competitive. CDW faces challenges from many different types of companies. They are competing against resellers, manufacturers selling directly to customers, service providers, e-commerce giants, and even your local office supply store. What differentiates CDW is its scale, a performance-driven culture, and enhanced capabilities. They have experts in integrated cloud, collaboration, data center, mobility, and security business technology, from the physical to the application layer. CDW sales can be broken down into hardware, software, and services. Hardware includes laptops, networking equipment, data storage, and servers. Software includes cloud solutions, security applications, and operating systems. Services include consulting, implementation, and managed services. CDW values its employees, which they call coworkers. They are focused on creating a good work environment with opportunities for growth. The company also prioritizes coworker safety and well-being, providing access to mental health resources. CDW uses different marketing strategies to reach its customers in the US, UK, and Canada. These efforts include traditional media, digital advertising, social media, and events. Because of their strong relationships with vendor partners, many of their marketing expenses are reimbursed. CDW is implementing a new enterprise resource planning system, along with other system upgrades, to improve efficiency and gain better insights into its operations. These changes are expected to be rolled out over the next couple of years. Now let's talk about the risks CDW faces because it is not all sunshine and roses. There are many factors that could hurt the business, and some of them are beyond their control. CDW relies heavily on its relationships with its vendor partners. If these vendors change the terms of their agreements, limit CDW's ability to sell their products, or reduce the incentives they offer, it could hurt CDW's financial performance. The technology industry changes rapidly, and CDW's sales depend on innovation and new technologies being adopted by their customers. If CDW can't keep up with new tech or customers aren't interested, they could face challenges. Social, ethical, and safety issues relating to the use of new and evolving technologies such as artificial intelligence-based technologies, including generative AI, may result in reputational harm and liability. CDW faces a lot of competition and the market is constantly changing. New technologies and business models emerge, changing the nature of competition. CDW's success depends on its information technology systems. Any disruption to these systems, such as a cyber attack, could seriously impact their business operations, damage their reputation, and hurt their ability to meet obligations. CDW deals with a lot of sensitive data, including personal information. Security breaches could lead to legal claims, financial losses, and damage to their reputation. CDW provides a variety of services to its customers. If they mess up and deliver low-quality service, CDW may lose business due to reputational damage. CDW needs to attract, develop, and keep talented people to manage and grow its business. Losing key personnel or failing to attract new talent could hurt their performance. Global economic and political conditions can affect CDW. Unstable economies, trade disputes, war, terrorism, and even natural disasters can interrupt business and hurt the global economy, negatively impacting CDW and its customers. CDW relies on government spending and funding policies, especially for their public sector clients in healthcare and education. Changes in these policies could cause customers to reduce or delay purchases from CDW. The supply of products that CDW sells is crucial to their success. Interruptions in the supply chain, whether due to natural disasters, labor disputes, trade restrictions, or other factors, could cause delays and increased costs. Sales to government agencies are highly regulated. Failure to comply with these regulations could result in fines, contract terminations, and suspension from doing business with the government. CDW faces potential lawsuits and audits, including claims of intellectual property infringement. These legal challenges can be expensive, time-consuming, and disruptive to their business. CDW's operations are subject to many laws and regulations, and it may face new environmental, social, and governance regulations as well. Compliance with these regulations can be complex and costly. Failing to meet these regulations or stakeholder expectations for environmental sustainability and corporate responsibility could hurt the business. CDW has a significant amount of debt, which could create problems. This debt could make it harder to invest in their business or react to industry changes. Because CDW has variable rate debt, they are exposed to interest rate risk. When interest rates go up, their debt service obligations increase, impacting their earnings. The market price of CDW stock can be volatile. Stockholders may not be able to resell their shares at or above the price at which they purchase such shares due to fluctuations in the market price of our common stock. Management is responsible for evaluating the effectiveness of internal controls over financial reporting. CDW has put in place robust cybersecurity measures that are overseen by the Audit Committee, with constant reporting by the CTO and CISO to protect itself from cybersecurity threats. Let's get into the numbers. Net sales decreased by 1.8% from last year. Gross profit also decreased slightly, but gross profit margin actually increased a bit because of software sales, which have higher margins. Operating income decreased, primarily due to lower sales. CDW uses some non-GAAP measures, which are adjusted numbers, to give a clearer picture of the underlying performance. These measures exclude certain items like amortization of intangible assets, equity-based compensation, and acquisition-related expenses. Some of CDW's key metrics that it uses are net income of $1.078 billion, average daily sales of 82.7 million, cash conversion cycle in days of 18, and adjusted free cash flow of $1.079 billion. The company is exposed to accounts receivable and inventory risks. A natural disaster or other adverse occurrence at one of our primary facilities or a third-party provider location could damage our business and macroeconomic and industry risks. These are all part of the company's risk factors. CDW has an audit committee that oversees its enterprise risk management process on behalf of the board of directors, including its cybersecurity risks. The company's supply chains is exposed to risks related to international operations. These risks include the imposition of additional trade law provisions or regulations, including the adoption or expansion of trade restrictions. The company does expect to continue to pay dividends quarterly. On February 5, 2025, CDW announced that its board of directors declared a quarterly cash dividend on its common stock of $0.625 per share. The dividend will be paid on March 11, 2025. One CDW reflects the work they do to find, attract, and retain top talent, encourage a welcoming and respectful culture, create meaningful partnerships across teams, and ensure coworkers have the tools and opportunities to grow and help the business succeed. The company received a civil investigative demand issued by the U.S. Department of Justice (DOJ) on June 11, 2024, in connection with a False Claims Act investigation. The company has exposure to fluctuations in foreign currency rates. Fluctuations in the exchange rate of the US dollar relative to the local currencies of our international subsidiaries, particularly the British pound and the Canadian dollar, could cause material fluctuations in our reported results of operations. Documents incorporated by reference certain parts of the registrant's definitive proxy statement for its 2025 annual meeting of stockholders to be held on May 20, 2025. Which will be filed with the Securities and Exchange Commission on or before April 30, 2025, are incorporated by reference into Part III of this annual report on Form 10-K. Now, looking at these results more broadly, CDW appears to be well managed, but is facing real challenges. While they are diversified across different customer types, they aren't immune to economic slowdowns or changes in technology. The competition is fierce. The DOJ investigation adds some extra uncertainty, even as cybersecurity seems to be under control. While their debt levels raise some concern given higher interest rates, they also have good cash flow to address this. Using a discounted cash flow model, we can estimate what price range we would expect. We'll use a 10% discount rate and 2% perpetual growth rate, along with their 2024 free cash flow. A reasonable target price range would be $220 to $240. CDW gets a cautiously bullish rating. Even though there are a lot of risk factors mentioned, a strong company like CDW will be able to navigate this given it has good governance and cash flow. Thanks for watching. If you enjoyed this video, please subscribe, like, and comment.